Abraham, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the Punjab and Sindh Bank's annual earnings call for fiscal year 25. Please note that this conference is being recorded and all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Shri Swaroop Kumar Saha, Managing Director and Chief Executive Officer, Shri Ravi Mehra, Executive Director, Shri Rajiva, Executive Director, and Shri Arnab Goswami, Chief Financial Officer. I would now like to hand over the conference to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank, for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Yeah, thank you, Shilpa. And a very good evening to all of you. And on behalf of Punjab and Sindh Bank, we thank you all to have taken your valuable time out to attend this call for the bank's quarterly performance of financial year 24-25. I will just briefly brief the highlights of the performance of our quarter. The presentation has already been uploaded in the stock exchange as per requirement. The press release has also been uploaded. So many of you may have seen the same also. But just to set the context for today's meeting and the conference, I would just like to mention some of the key highlights of the bank's performance of FY 24-25. The business of the bank grew by 11.69% and just 2,29,000 crores. Deposits showed an uptick of 8.68% and touched 1,29,000 crores. And the advances was a robust at 15.87% and just below, falling short of the 1 lakh figure at 99,605 crores. The interesting point in this business performance is that the bank is now much more in the business growth-oriented path, and we have touched the double-digit business growth compared to the last year. In terms of the other performance of the bank, the NII grew at 33.19% for the financial year. The operating profit was a very robust 2,075 crores for the entire financial year, and it grew at 83.47%. The net profit for the year was 1,016 crores and grew at more than 70.76%. And for the quarter, as far as the quarter is concerned, the net profit was at 313 crore and it grew by more than 125%. The operating profit grew at 142% and stood at 816 crore for the quarter. The other, in terms of the efficiency parameters, the net interest margin for the financial year increased by 40 bips and stood at 2.85%. The cost to income ratio showed a significant dip of 1,093 bips and has reduced to 61.23%. The return on assets was at a improved level of 0.67% for the financial year. In terms of the asset quality, the gross NPA has reduced by 205 bips for the financial year. It went down 3.23. It has gone down to 3.38%. The net NPA has gone down to below 1%, which was as per our guidance, and just touched 0.96% for the March 25. The provision coverage ratio also has shown an uptick, and it has increased by 269 bips and it has increased to 91.38%. So we were also given a guidance that the provision coverage ratio we will be able to cross 90%. I think we have been able to manage that. So as far as the till this part, I would like to mention that we had given during our past conference calls that the deposit growth guidance was between 8 to 10%. We were able to maintain at 8.68%. The advance growth, we have given a guidance of 10 to 12. We have surpassed that advance growth and stood at 15.87%. The RAM percentage, we had given a guidance of 56%. We just fell short of it, but it's fair enough. 55.15% will make up for the small differential that is there. And in terms of the gross and net NPA, we had given a guidance to be below 4.5% by the end of March. We are now at 3.38. The net NPA, we had given a guidance of below 1.5. We have reached 0.96. The PCR guidance was between 89 to 90%. We reached 91.38%. So we have been able to meet all the guidance parameters. The recovery of upgradation also, the guidance was to achieve more than 1,000 crores. We have achieved 1,738 crores of recovery upgradation. Of course, this is because of one of a big resolution that has happened by a transfer of an asset to NARCL, which the industry all knows about. The credit cost guidance was below 1%, and we were at 0.20%. We were able to achieve it comfortably. The slippage ratio guidance was given at less than 1.25%, and we were just below 1% for the financial year. So overall, the performance of the bank has shown much improved at much improved level. The overall business growth has happened. The efficiency ratios have improved. The CASA, of course, we had a CASA. We are facing challenges. The CASA grew moderately at 5.38%. However, the CASA and retail term deposits, we are growing over 7%. So as that is on the deposit front, and it increased at 8.68%. The RAM percentage, we had said that we were going to sequentially improve it as for year on year and quarter on quarter, and we have been able to maintain the trend. And from March, if you compare from March 22 onwards, the RAM percentage, which was at 50.71%, has now improved to 55.15%. The overall in credit profile of the external rating, as far as the external rating of our accounts is that we have been telling the investors and analysts that we are churning our corporate credit portfolio, and we are and the trend of March 25. If you see a slide number 12, we will find that there's a shift in the overall churning that is happening in the credit portfolio. And we are now also focusing on higher yielding assets. So the AA's and A's are showing a slight uptick in the quarter of March. So overall, the yield on advances have improved. Of course, as the notes to accounts must have mentioned, and that we have booked additional income due to the NARCL resolution, which has boosted our other income and also our interest income on advances, because that was one of the factors which also helped the performance of the bank. The performance of the bank was also boosted by a good contribution from the treasury, and the treasury income was also improved significantly. And from the investment slide, it can be seen that the profit from sale of investments was 106 crores for the quarter ending March. The fee income was also shown a very significant improvement of over 27%. We are constantly working on how to improve the core fee income, and we are very concentrated on how to prevent revenue leakage and making the systems more robust so that our revenue earnings do not get impacted. All in all, overall, I would like to say that due to as we have been committing to the investors that we will continue to show a sustainable performance. I think for the last 4 or 5 quarters, the trends continue to be positive, and we'll continue to work on this sustainable performance going forward also. So now I would like to open up the session for the question answers. Thank you very much.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to 2 per person, and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press *3#. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. I repeat, if anyone is having connectivity or audio issue, you may share your questions on WhatsApp to us at 790-743-1859. Before asking the question, I request you to please introduce yourself and your organization. Our first question is from the line of Mr. Sushil Choksi from Indusin Equity. Sir, please go ahead with your question.
Excellent result and a successful QIP. Sir,
Thank
you've
you.
spoken about all about 24-25. For 25-26, what are estimates in terms of advances, deposit, NIM, cost to CD ratio? What kind of ROE you will achieve? What kind of gross NPA, net NPA are you targeting? How will you target CASA increase when the interest rates are falling? CASA can be attracted. What measures will you take on this? These are my initial questions.
Yeah, thank you, Mr. Choksi. As we have talked about the performance of 24-25, we have also given a guidance for 25-26 in our last slide on slide number 40, wherein we have set the tone for the year 25-26. The deposit growth would be between 8 to 10%. Advances growth would be we are targeting between 15 to 16%. Our CD ratio is at 70. We like to keep it between 78 to 80%. Overall, the gross NPA is at now 3.38. We'd like to bring it below 2.5%. Net NPA, which is at 0.96%, we like to bring it down to 0.75%, below 0.75. The provision coverage ratio, we like to jack it up to more than 92%, between 92 to 93%. So these are some of the highlights that we have provided. As far as the guidance on the ROA is concerned and ROEs are concerned, we like to mention that we have increased the ROA to a level of 0.67%. We like to bring it up to, for the next year, we like to bring it up to a level of 0.75 to 0.80%. As far as the NIM is concerned, we feel that there will be some correction maybe in the NIM going forward because of the developments that are happening on the liquidity front and the uh, two of the cuts already have happened. Maybe one or two more cuts are on the anvil. So we are expecting another 50 bips cut maybe down the line during the financial year, which may have some impact on the NIM. So the NIM may moderate, but we will make all efforts to keep it at a level at which we are at this point of time. On the cost to income ratio, we did, as you say, you must have observed that the cost to income ratio has come down from 72% to just over 61%. That's a good development. We had told the market and the investors that the one-off impact of the wage provisions of the bipartite had impacted our cost to income ratio. We are happy to see that we have been able to bring it back to a level which is much more comfortable, and we like to keep it at a 58 to 60% cost to income ratio during the end of the financial year. In terms of the deposit mobilization, as we all understand that the deposit mobilization is a challenge that we have to face. We are innovating our products. We are improving our digital products on the CASA and the retail front. The product customization for various customized customers, like the defense accounts, like the salary accounts, uh, like women customers. So we are moderating and customizing various products for the bank, and the more and more digital acquisition will going to happen. We are also working on, as I had told in the multiple times during our previous interactions, on the new projects that are on the verge of completion. The call center has started the initial part of the call center project, which we had promised in the previous quarters, as the initial part has started, which will help also which will also contribute to the lead management on both deposits and the asset side. Apart from helping the bank on the collection efficiency and the overall 360-degree feedback of customers to do cross selling. So the deposit is already we are already just post 31st March. We didn't wait for a single day. Our teams are already on the ground, mobilizing deposits in the market. In spite of a season which the first quarter and the first month post the annual results. But still, our teams are already in the market and trying to uh, acquire as much customers as possible. The tap banking, which we had promised, also are also going to be implemented very shortly, which will also help us on our CASA acquisition.
Sir, I'm referring to your slide of guidance on page number 11. When we are already at 3.38 on gross NPA, net NPA is at 0.96.
Yeah,
Your recovery in upgrades, I understand last year you had an exceptional year. This year,
yeah.
1,000 was fine. Cost to credit cost, you achieved zero point 0.2, maybe thanks to one off. But why are we being so conservative in our numbers compared to what we have? My second question here is, what is the outlook on treasury and how are we positioning when the 10-year GSEC is at 635?
Hmm.
And third is, with all your new initiatives, what kind of digital spend are you likely to do, and what kind of digital spend is being done if you bifurcate between retail RAM and corporate bank?
Okay. As far as the credit cost is concerned, yes, you may feel that we are giving a conservative guidance. We like to be in that zone because, see, we are still having some stress in the agriculture and the uh, a small segment of MSMEs. While the corporate looks very healthy, we are still having some. If you see our slippages trends in this quarter, also you'll find that the agri slippages have gone up a bit more. Though the quarter on quarter YOY basis, the slippages are less, but still there is a residual area of on agriculture which we like to address and take care of. In one or two mid corporate accounts, the accounts would be, though we are well providing for them already, which are at the 100 to 150 crore range. Those may which we feel are or hovering between the SMA 1 and SMA 2. So if those slips also, that can have a small impact on that. Otherwise, but we will like to keep this guidance and show a much and achieve the guidance in a better fashion. So that was the basic idea. In terms of treasury, of course, we are starting. I am very sure with the movement of the yields, the quarter would be looks much more rosier than what it was in the last quarter. Though the last quarter was also good for treasury, but with the movement of yields that has happened, we feel that this year's performance on treasury will be much better, even much better than what it was on the last year. Apart from the third question was on the new initiatives. Oh, yes, the digital lending is some of the areas where we have already started is on the housing and the vehicle loan. We have already started on MSME up to 25 lakhs. We are going to bring the digital part, the STP. I'm talking of the straight through processing of digital lending. And this would go above 1 crore, up to 1 crore very shortly. The process is on. We have started with the up to 25 lakhs MSME. Then there are many other uh, digital lending products on the anvil, like the GST product, the gold loan, the personal loan. So these are all tied up and will happen in maybe 3 to 6 months time as we customize the products for ourselves. Gold loan also we like to customize for us. So the digital lending is a big project for us, and we like to take it forward as we move ahead. On the new initiative, other new initiatives, I've already said that we are going to have the call center. I've already talked about the CASA back office is also getting operational this month. Means the next month, and the centralized trade foreign exchange transaction module is also the customization is going on. Maybe by September we will have those all these things in place, because these are now very realistic projects which are getting implemented. We are also working parallelly on a performance management system, which has been also a talking point in our interactions before. So the performance management system in the bank to to have a much more scientific way of assessing performance of employees in the bank was going to get implemented in the current financial year, and we are in a very advanced stage of starting the process. So with that, in also will also support the overall environment on our initiatives going forward.
Sir, any amount quantified for digital spend and treasury
Uh,
outlook?
we we have the, but I don't have it ready at this point of time. I can share with you separately after the meeting.
Okay. And second thing, sir, treasury outlook, you mentioned that we are well positioned, but are we churning from more lucrative in terms of corporate bonds, or what are we doing in those respects?
See, this is a dynamic environment. So as the dynamism happens in the ecosystem, we will churn our portfolios, and we'll make all best. We'll use all our skills to make you best use of the opportunities that the market provides with us. So there is no demarcation on what can be done today and on tomorrow. But the overall optics is this: that in a the environment that we are in at this point of time, we'll make full use of the treasury functioning in the bank in this year.
And second thing, India is likely to attract a lot of manufacturing because of this global trade war. Are we looking at something to benefit from Gift City or anything, something new initiative which we need to take, which we are not in place for?
Yeah, we have got the in principle approval for the gift city, but you know that there's a process for getting the final approval and the implementation of it. But the board has given the in principle approval of going ahead with this gift city concept, by opening a gift city branch, and we are now going through a consultancy process for opening. Yes, that is in the agenda for the financial year, but that it's has its own ways of implementation. So it's a project of maybe a year or so, which we like to, the benefits of it may come next year, but the process has, yes, the process has initiated.
Sir, thank you and all the best for the year. Then
Thank
thank
you.
you for answering all my questions.
Thank you, Mr. Toksi.
Thank you, sir. Our next question is from the line of Ms. Saloni Shah. Ma'am, please go ahead with your question.
Hello. Thank you for the opportunity. My question is that, can you specify the contribution of digital channels to overall business, and are there any cost savings?
Yeah, can you be a bit clearer, please? We are not getting your voice clearly.
Okay, okay. Am I
Yeah, now
audible?
you're loud and clear. Please go ahead.
Okay, okay. Sir, my question is that, can you specify the contribution of a digital channels to overall business, and are there any cost savings happening?
Yeah, Mr. Mehra will answer to this.
Good afternoon, Ravi. Mehra this side. With regard to digital sanctions, I'd just like to mention that out of the total loans that we sourced and sanctioned during this year, we started the digital journey on 5th of December. And since then, we have sanctioned almost 7,000 loans pertaining to home loan and auto loans with a quantum of around almost 1,100 crore rupees with digital or assisted journey through STP journey.
Oh, okay. And also, sir, I have one more question. Is that your UPI transaction volumes have grown over 60% year on year. So, how is this translating into customer acquisition or cross-sell opportunities?
Madam, may I understand what is the cost that you mentioned that is gone up by 60%? Your voice is a bit.
UPI transaction.
Okay, UPI transaction. Okay, okay, okay. Yeah, please let me know your question again, ma'am. Now I've understood the context.
Okay. So my question is that your UPI transaction volumes has grown over 60% year on year.
Correct.
How
Hmm.
is this translating into customer acquisition or cross-sell opportunities?
Yeah, this is a interesting question, and I think very rightly the right opportunity. we are the volumes are increasing, as you are rightly saying that the UPI transactions are increasing. Now, the customer acquisition also is one of our process which we carry out through the digital process. But we are also upgrading our digital banking uh, app in a better fashion. The customization is getting more and more strengthened. We will get the full benefit of it maybe during the current year. So while we appreciate the point that the UPI transactions are increasing, so that's why we are bringing this concept of the tap banking for acquisition of customers, and the call center also, once it gets activated, these two parallel projects, which once it gets implemented, will be help us to analyze our transactions and go for more and more acquisition of our customers. So that is on the cards, and in terms of the numbers, I think I'll not be able to mention to you at this point of time. But yes, definitely, your point is well taken. That we are on the process of analyzing our transactions to acquire more and more customers.
Okay, sir. Got it. Thank you so much.
Thank you.
Thank you, sir. Our next question is from the line of Mr. Ashok Ajmera from Ajcon Global. Sir, please go ahead with your question.
Mr. Ajmera, good evening. Good evening, Mr. Ajmera.
Hello.
Mr. Ajmera,
Good
can you
evening,
hear
sir.
us?
Yeah, now you're audible.
No, I can hear you, but can you hear me?
Yeah, now I can hear you, Mr. Ajmera. Please go ahead.
Yes, sir. So compliment, sir,
Thank
for
you.
very good numbers for the quarter as well as the whole year. The operating profit is jumping to 816 crore in the quarter, and the overall year is, I think, 2,075 crore. Phenomenal achievement, sir. And on many other parameters also, the bank has started performing much better than what it used to be.
Thank you.
Even this time, even the credit growth is also good. Having said that, sir, my question generally remain on that our we have a very low base, among the among the public sector bank, we are among those few small banks, but having the benefit of being a public sector bank with the huge government holding and all that. So these numbers should not be a sort of a benchmark like comparable with other banks. We have a lot of scope to grow faster than what we are growing. Of course, keeping the current quality into mind. Having in that background, are we not looking for some good MSME or some good small corporate accounts? May not be speaking 55, 35, 55, 45. But so that, we have good income also, as well as we grow much faster and come to a particular decent level, sir. So this is my just first observation and your comments on that, sir.
Yeah, thank you, Mr. Ajmera, for your compliments. And as you have been watching over the last 2-3 years, how the bank is slowly transforming into not only in systems and processes, but also qualitatively we're trying to grow. While we appreciate the point that we have a low base and we have opportunity to grow faster, it is factually correct. But also we need to understand that in today's environment, we also need to be cautious of the fact that the top line should not hamper the bottom line. And we are working on how we have a better bottom line growth also on a sustainable basis. So therefore, in terms of the top line, while you have observed this time also, our deposit growth has grown 8.68%, our advances has grown by 15% plus, and we are maintaining the more or less the same guidance for the current year as well. So therefore, and the systemic growth at this point of time is around 11 to 12% on the advance side. So we are giving a guidance that we will be growing a bit faster than the system, which takes care of your question that we can grow faster than usual. But we are mindful of the fact that the growth has to be qualitative, that the growth has to be on a sustainable basis, and the growth also should not impact the bottom line going forward. When in terms of any eventuality in the ecosystem, we should be also prepared for that system. So, but we will continue, and we'll continue to progress on our growth front on a very, very qualitative and a sustainable method. On your remarks on the MSME mid corporate, yes, we are a bank which should and is doing for giving focus, lots of focus on MSME and mid corporate. That's why we have now opened more than how many mid corporate branches are there? More than 12 mid corporate branches. We are opening specialized MSME branches all across the country. We are doing we have designed our products on the cluster based financing, and we are also expanding our branch network all in on a pan India basis. We have a program of expanding, opening at least 150 branches for the current year in this financial year. So therefore, and get into the catchment areas where we are not present at this point of time. So we are overall in 361 districts out of the 700 potential districts that we can be in. Therefore, we keeping a 360-degree view, we need to expand in those territories where there is a lot of scope for penetration. So we are opening a new zonal office in Patna. We are opening a new zonal office in Varanasi. We are opening a new zonal office in Agra, and we are opening a new zonal office in Moga in Punjab. So, which will not only enable the bank to be much more granular on the specific area you are hinting at regarding the retail, MSME, mid-corporate financing. So, and many of these zones presently which are getting covered are having more than 80 or 90 branches, which for in today's environment, it is very difficult to generate business by a zonal head by controlling so many branches. So we have now rationalized the zonal office structure of the bank, and we have brought down the level of number of branches per zone to an average of around 60 to 65, which gives a much better control for growth and for compliance. So therefore, we will take this as a key strategic area for focusing on retail, MSME, and mid-corporate accounts, and that's why you find a very, very significant shift in the composition between RAM and corporate, and which has now already touched 55%. So we will take your advice very, very seriously and move ahead in the coming years.
So thanks, sir, for very elaborate answer on that question. Sir, you have covered my next question was, which you have covered this point partly, is a pan-India presence of our bank, Punjab and Sind Bank. Now you are saying that yes, a lot of initiatives are being taken and the zonal offices are being opened, and you are already, in fact, almost about 45% of the total districts you are present there. Can I have some data or numbers on our total credit dispersal, credits in NCR, Punjab, Haryana, in that area, and the rest of India? Can we have some ballpark, some number?
No, I will not have the segregation of the numbers at this point of time. Between state-wise segregation, that is, I can share. My team will share it separately with you, but I can give you an overall figure that we are now having nearly more than 13,000 crores of sanctions / in principle sanctions in hand, which the pipeline now is increasing. So and also, I'd like to tell you one more point here is that earlier we were not having this tool with us on branch expansion. We are having a very, very customized tool which allows us to understand district-wise penetration of banks in a particular district. And we have customized data on which districts we are doing good, which districts we are not doing as good as the others, and in which districts we are not there at all, while there is a lot of good performance and there's a high CD ratio in those districts. So therefore, this area of opening branches in areas where we can open, and there's a lot of potential. I can just tell you, we opened a Vizag branch very recently with more than 100 crores of business. Another branch we opened in Thrissur, down south in Kerala, where the opening day business was more than 100 crores. So that is the potential we are looking at while opening new branches. And while we can do that, opening of a branch, in fact, we have kept a separate vertical only to open new branches, rationalize new branches, and monitor the business in those new branches. So that is the structural changes also that we are bringing in, so that we can penetrate deeper and deeper in the levels where we are not present at this point of time.
Oh, yes, sir. That is a very, very good initiative and taking the bank really to pan India. Sir, what are your views on this co-lending and NBFC space, where the now RBI has also permitted that you can go for NBFC funding even for non-priority sector onward lending or something like some kind of relaxation or something. Are we working on that in this space to increase our book through either co-lending or through NBFC lending, so that we get much higher returns also, whether our book also increases faster?
Yes, yes. I think we have said this in our earlier interaction. We are using the co-lending model of doing business through co-lending as per RBI guidelines in a big way. We have already reached a figure of 3,300 crores of business, both either retail or MSME, in this area through co-lending. And now and we have developed proper systems also in place. And with RBI coming out with fresh guidelines on the non-priority sector also, which shows that the model of business is very, very appropriate for lending in MSMEs and on the retail segment. So once we are waiting for the final circular to be issued by RBI, and we will use this model of lending very, very effectively. Till today, our experience in co-lending is highly satisfactory, and in the lending level we are at this point of time. Out of the 3,300 crores, our retail is around 1,475 crores, and MSME is 1,800 crores. Very limited delinquency. So our experience has been very healthy. Our conversion is only 30% of the leads that we get. So our due diligence process is at a very highest level. And once we get the final circular on the non-priority segment, which is going to be issued RBI at any point of time, we'll explore that and we'll take it in our stride to expand our business in MSMEs as well and non-priority segment as well.
Point well taken, sir. Sir, will you throw some light on the overall recovery? I was in fact absent for the part of the time because of the connectivity. So
Yes. Yeah.
the recovery from return of account, the prospects in the year FY26, and our overall return of book, and what kind of percentage we expect every year to recover, or maybe especially in the FY26, and what is the total overall recovery efforts, and either through NCLT, through NARCL, in FY26, will you be able to give some color on that, sir?
Yeah, my ED, Mr. Rajiva, will take this question.
So, if you look at the recovery trend, over last 4 years, we have been recovering close to 1,700 to 2,000 crores. So last year we had approximately 2,000. This year we have recovered close to 1,700 crores. Now in the return of book, which is quite substantial, our return of book is almost 7,000 crores, and we have been recovering again almost 10% over last 4 years. So I believe that.
Wow, that's great.
So this year also, out of 7,495 crores, we have been able to recover 821 crores, which is close to 11%. So we believe that there is a lot of scope for recovery in return of accounts, and that is likely to continue in future also. And in FY26 also, we expect the recovery to cross 1,000 crores for certain. And of course, it will be in line with what we have been doing in the past 2-3 years.
Oh, that's great, sir. 10% from the recovery from the return of book is a very, very good number. Again, generally people give the guidance of 5 to 7% or 5 to 6%. So your efforts are really paying off, and you are doing well on this front. Sir, my last question in this round is around the treasury front. like with the rate softening and there are expectations of some more rate cuts coming in, I think we are sitting at a very comfortable position. I think 6.35 is something. It may go down to 3.1, 1.5. So in the FY26, are we do we expect a bumper profitability to be added from the treasury books, both by way of the sale of treasury assets, and secondly, I think apart from the AFS book which goes to the reserve, what in trading as well as the security sale which comes in the profit. So whether you will be able to give some information on that.
Yeah, I've also already answered this question partially to Mr. Choksi earlier, but I'll repeat it once again for you also. Uh, uh, I appreciate, yes, the treasury yields now in the softening stance, and there are expectations of further rate cuts. So it is expected, and with the OMOs also being announced from time to time, there's a lot of hope that there will be further, as the liquidity also improves, there will also be softening of the yields. I don't know whether I can call it a bumper year for treasury, but what I can fairly say from our side is that the treasury contribution to the overall profitability of the bank will be much more than what was in the previous year. I think we should leave it at that point of time. I think you had another question on AFS. Sorry, I think you had another question on the AFS, madam.
Yeah, so if you see as per the new guidelines, the profit FPTL profit will be hit to PNL account and AFS will do general reserve. So this year we have a total MTM gain of 55, around 56 crore that has contributed in the PNL account, and around 75 crores has gone to general reserve, and it has increased our capital fund. So according to the yield movement this year, the figures of this year will depend upon the yield of at the quarter end, sir.
Do we have a healthy book to generate some profit out of that?
Pardon, sir?
Do you have a healthy book?
Yes, sir. Yes, sir. Yes, sir. We have, sir, we have churned our portfolio according to this new guidelines also. So we are having a good portfolio. According to the market, we'll definitely earn profit out of it, sir.
Trading profit too?
Yes, sir. So last
you are generally active in treasury for the trading profit?
Yes, sir. Yes,
trading.
sir. Yes,
Yeah,
sir.
we are very active on trading.
We are churning our portfolio also. If you see in the March quarter, we have earned 106 crore profit, and total profit out of the trading during last year was 371 crores, sir. So we are hoping in the same line, sir. As a yield moment, so we do churn our profit also, and we are hopeful that it will be in line with the last year only, sir, and much more than that also, sir.
Thank you very much, sir, and all of you, sir, for having answered my query so very well and giving a very elaborate presentation on the bank. And bank is really moving very fast now in the right direction. And all the best to you, sir. Thanks a lot.
Thank you, Mr. Ajmera.
Thank you, sir. Our next question is from the line of Mr. Omkar Shavan. Sir, please go ahead with your question.
And good evening, sir. Thank you for this opportunity. Sir, my question is, the government has planned to clear 30-40% of unclaimed deposit held by public sector banks by FY26. Is it possible to successfully clear the large quantum of unclaimed deposits by FY26? And will this exercise also likely to result in increased legislation? How our bank stands on this?
Are you talking of the DEF? Okay. See, the unclaimed deposit is a regulatory. The migration of the unclaimed deposit to the DEF fund is a regulatory phenomena, which we comply with it. That is a amount that migrates to the RBI. But we also, when the demand comes, we also get the returns from RBI very, very promptly. The efforts that are getting put in for our side is that we are much before the accounts become eligible under this unclaimed deposit or DEF fund. We are contacting the customers. We are trying to reach out to them. on various ways of media and through our channels of branch or digital or website, and we make concerted efforts on that. But some of the legacy accounts that we are still having with maybe those will continue to migrate to the deaf fund. But the efforts for the accounts not getting migrated is on a very high scale. Our operations divisions works on that very closely and tries to touch base with as many as customers as possible. And that's why we are also getting requests once sometimes when the accounts get transferred to the RBI. We also get requests from once it goes there to the RBI, then we get requests and we make the request to RBI, we get the money back. So that's a continuous process, but the migration of the old accounts will happen to a reasonable extent as we still go along. It will not be able to fully cover the entire amount that is there. We have already, so far in our bank, we have already transferred around 870 crores of money to the deaf fund. Mr. Chavan, are you there?
Yes, sir. Do you see any real bottom line impact from this?
Not really. This migration is happening on a periodic basis. It's already factored in our overall strategy of things.
Okay. Also, my last question was, will there be any further capital raising in FY26?
We have raised, as you must be knowing, we have raised capital on by way of QIP of 1,219 crores in Q4 in March last quarter. And also before that, we had a 3,000 crore of infra bond issuance. So we are adequately capitalized, but we will take a view on this after our post results. Our ICAP committee will work on this and maybe will analyze the situation to how to go about it. But we will keep the doors open for raising further capital. But the assessment of it has still to be done. We are waiting for the completion of the results. Now we'll go into the assessment mode, and at an appropriate time, all of you will come to know what is our plan for the capital raising. It is in the agenda, but at what time and at what quantum, we will let you know at an appropriate time.
Okay, so thank you so much.
Thank you.
Thank you.
Thank you, sir. Our next question is from the line of Mr. Umesh. Sir, please go ahead with your question.
Sir, I congratulate all the team of Punjab and Sindh Bank for the wonderful result. So I have two questions. So the bank has achieved significant improvement in ROA, that is standing at 0.79% and ROE at 12.4%. But how does the management plan to further enhance the profitability in FY26, particularly with respect to the cost optimization and improving the cost to income ratio, sir?
Yeah. See, as I said, the ROA, the substantial uptick in the ROA is also due to the one-off contribution that we got from one of the resolution in recovery, which increased our entire interest income and the other income by over 460 crores. So that is a one-off transaction that has happened. But we feel that the overall the situation is that we are also, if you see our provision coverage ratio has also shown an uptick from 89% plus to 91.38%. So we have also now provided adequately on the aging front, at least up to December. So our forward-looking initiative is like this, that now while we have taken a substantial income due to the recovery, we have also ensure that our future aging also requirement gets diluted slowly and slowly. Therefore, as of now, we have been able to provide the requirement of aging till December 25. So a 3 quarter, we are moving a 3 quarter ahead. So that's how, if there is any impact, and of course we expect a good treasury year. We also expect that the recovery we have still some low hanging fruits on the mid corporate segment. Of course, the larger ones are more or less resolved for our bank. We still have a segment between 100 to 300 crores of segments where we expect some resolution to happen, which will contribute to our bottom line. We are also churning our balance sheet in a way in the corporate lending between the AAAs and the AAs. You will find that in this quarter also the AAs have increased compared to the AAAs, which has decreased. And while maintaining the health of the portfolio, we'll also churn our balance sheet. Our RAM segment, we are estimating more than 57%, so that will give you a better yielding assets. We are concerning a gold loan, equipment finance, MSMEs, GST, education loan, gold loan. These are some of the key areas. So overall, what we would like to say, and of course, while there will be some correction on the advance income due to the repo, which is 47% of our total book at this point of time, we will also get some positive impact on the borrowing rates that are cooling down. The rates on the CDs and the bulk deposits will also cool down. We have already reduced our term deposit rates on certain products. We had from 7.45% to 7.25%. We have reduced our savings account deposit rates by 10 bips in this period. So these moderations will also contribute. So in view of in this entire scenario, we expect that we will be able to the ROA annually is 0.67. So we like to guidance on that part will be between 0.75 to 0.80. And of course, the resultant impact will be on the return on equity also.
So thank you for the answer. So I have another question. Sir, with regard to your gross and net NPA ratios, which have been improved to 3.38% and 0.96%, surpassing your financial 25 guidance. With regard to your financial year 26 targets, that is less than 2.5% GNP and less than 0.75 net NP, what are the specific measures or the sectors will be prioritized for the further NPA reduction, sir?
Yeah, Mr. Rajiv, our ED will respond to that.
So if you look at our numbers, of course, you rightly quoted, both GNP and net NPA have gone down. Now, this year we have been able to recover substantially from OTAs. Now, to quote you some specific numbers, we got around 317 crores as compared to 101 crore last year. Of course, sale to Narsil was another big gain for us. So there are various strategies for reduction in NPA, which includes one-time settlement, special schemes for handling agriculture cases. Of course, from sale of properties in SARFAESI, we keep on getting some recovery. This year, we have been able to get something around 84 crores and sale to ARC. So there are various means we are deploying. So in a way, it's increase in the awareness of the field level, as well as improvement in the recovery culture in the bank. We expect the downward trend in GNPA and net NPA in line with the guidance that MD sir has given for FY26.
Mr. Umesh, are you there?
Yes, sir. Yes, sir. I'm here only. Thank you for the answer, sir, and congratulations once again.
Thank you, Mr. Umesh. Thank you.
Thank you, sir. We have got two questions on the chat, sir. May I go ahead with a question?
Yeah, please.
The first question is from Ms. Myra Mittal. Her question is, the bank opened 52 new branches in FY25. What is your expansion plan for FY26, especially in semi-urban and rural markets?
Yeah, our Mehra ED will respond to this.
Actually, this financially we plan to open around 150 branches, primarily into the southern state and Maharashtra, Andhra and all these areas, particularly eastern region as well. And majority of the branches will be in semi-urban and urban areas.
Thank you, sir. Our next question is from Ms. Sakshi. The actual RAM percentage to deposit slightly missed the guidance given for FY25. And now the guidance for FY26 is greater than 57%. What are the plans to push this over the 57% mark in FY26 and what are the top priorities for FY26?
Yeah, Ravi Mehra this side again. For this particular financial year, as we have given the guidance of 57% and more, the RAM segment, we definitely want to focus on few particular segments like MSME and home loans as well. We are also open to more channel partners with regard to the co-lending and DA assignments. And as we are going to open up more branches in the districts where we don't have any presence, and we have also opened some more than 12 mid-corporate branches this year as well. So hopefully we'll be able to surpass this guidance given.
Thank you, sir. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 99306251104 or mamta.samant1@densu.com. Details are mentioned in the WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference call today. You may now disconnect the lines. Thank you.
Thank you, Shilpa.
Have a good day.
Thank you, everybody, for joining this call. Thank you.
Thank you, sir.